95% of traders lose money. Everyone knows this, but approximately no one explains why. Today, we're having someone who have looked into the data of over 500,000 traders' accounts. I'm Hasan, head of marketing at FP Trading. Welcome to the FP Trading podcast. You can have a great strategy, clean charts, everything is there. But if your head is not right when you are pressing that button, everything can fade away. Today, we are having a very unique guest, a guest who built an AI tool that detects over 500,000 traders' account behavior. It also detects over 60 behavioral issues that all the traders are having. Let's all welcome Jonas, CEO and co-founder of Hoc-Trade. His team built Trade Medic AI. Jonas, very nice to have you.
Thanks for having me, Hasan. Looking forward.
So Jonas, before we go into the data, I want people to know who you are. Can you tell us in simple words what way you decide to build Hoc-Trade?
Yeah, sure thing.
Yeah.
I founded Hoc-Trade roughly 4 years ago by now. And I've been a trader all my life, right? I've been trading Forex, gold, crypto later, and you can imagine, like, I've done every single mistake or pattern that we find in the data. In fact, those initial algorithms which we set up was based on my Excel tracking sheet that I did myself, right?
Mhm.
So it really comes from my own pain, where those initial algorithms came from.
Yeah.
But I had the feeling this is not only me, right? This is a very human thing on how we fall into those patterns, and there must be a way of like quantifying, making it tangible for everyone. And not everyone can study behavioral finance and keep an Excel list of exactly finding that out. And it's so important for traders. So we decided to build this into an AI that finds it in your trading data and tells you exactly how much does each behavior affect you.
Got it. And your main product is called Trade Medic. Can you explain what it does in one or two sentences?
Sure. So it's called Trade Medic, right? Like the medical report you get from your doctor. What is in the normal range? What is not going well, right? And it takes every person's or trader's trade history. There's so many data points, all your entry timings and exit timings, the symbols, the lot size. There's so much value in the data, and it runs those algorithms over it, finds those patterns, and then shows you, okay, revenge trading cost you $3,580, whatever it is. Over trading that much, cutting your profits early, but you have been good in news trading, for example, you made that much money. So it gives you exactly for your behaviors the real numbers behind it. And that is important, so that each trader understands, okay, how much money did I make or lose with certain behaviors. Only then it becomes really tangible for the trader, right?
Great. So about the point that's losing money, let's get into a specific patterns that we all know, and mostly maybe all the traders do it, but they don't know what it is.
Yeah.
So let's go into the first one, which I believe revenge trading. Can you tell me what is the data telling us about that?
Yeah. So revenge trading is an interesting one. It is very common, right? So it is not the most common one, but among the most common behaviors, I think 40% of the traders are negatively impacted by revenge trading. So out of those 500,000 traders, 200,000 of them have a negative impact from revenge trading. How does this look like? Within the first couple of minutes after you take a loss, right? You have this, essentially it's a danger window. 15 minutes is roughly the average, but for every trader it can be slightly different, and the tool will tell you how long is your danger window, where your decision making significantly drops, right? You're more reacting to the loss you just had. You want to bring things in equilibrium kind of again, get rid of that pain that you have from the loss right now. And it is measurable, as I said, like roughly 15 minutes on average, when you start to behave essentially rational again, based on your analysis, based on your trading rules. It's very common. Scalpers are the most in danger, right? So actually for scalpers, 68% of the traders that we see have a scalping strategy are negatively impacted by revenge trading, which makes sense. They are jumping in and out of trades much much more often. For day traders, for swing traders, it is less common. But yeah, it's definitely something you should look.
Yeah, I mean, it's obvious. You can't fight the market. And when you lose, you just want to revenge it. It ends up losing more money.
Yes.
So the dangerous zone is 15 minutes, you said. What is the safe zone?
So the thing is, for everyone, it's a little bit different, right? But the tool directly tells you. It gives you the number. Hey, for you, it's 15. For you, it's 30. For you, it's 45 minutes.
Okay.
For me personally, it's 30. Right?
30 minutes.
And I have a rule then built on top. Initially, I said like, okay, I don't trade within those 30 minutes. Sounds easy, right? It's not as easy as it sounds.
Yeah.
When implementing it. Nowadays, I'm only at like, okay, no more market orders within 30 minutes, because there might still be good setups, but a market order is way more impulsive. And the biggest problem with those trades is that you are impulsive of those trades. You're not acting based on analysis, a rational decision, but you are acting, as an impulse of like getting this pain of loss away. So I only do limit orders, which forces me to be like more in an analysis view. This is my entry price, this is my exit, this is my stop loss, and so on. So for me, that is personally the rule, for example.
Right. So let's talk about another point, which is FOMO, fear of missing out or fear of missing opportunity.
Yeah.
Some people call it. I mean, you see the market, gold rise by 2% in 10 minutes now. And, you feel like, okay, I'm missing out. I need to get in. Let me make some profits out of this trade.
Yeah.
What is the data that tells us about that?
It is a very recognizable pattern that we see in the data right there. So the pattern is typically, okay, there is a stronger move. As you say, gold sometimes now or silver goes up by hundreds of pips within just an hour, right? And the trader feels like, I missed the move, right? A big move has happened. Probably the momentum is already fading. And then the trader still jumps on the trade. So you felt kind of like, I missed out of the big move. And then you still jump on the trade. But on the first sign that things are not going well, the trader gets out of the trade already. This is the typical pattern that we see.
Okay.
Because you're not really convinced on that trade.
Yeah.
You jumped in out of an emotion, right? Of
Okay.
like feeling, okay, I missed something here. Let me look at that. I think it was like 24% of the traders, 28% of the traders, sorry, have this behavior and are negatively impacted by it. Negatively impacted as in like those trades have an average worse performance than the other trades that they have, right? So we can always compare the trades from the trader if they fall into a behavior or if they're not in that behavior. And that means then, okay, for those traders, those trades were indeed having a much worse performance.
I believe it's normal because when you are having a FOMO, you just want to enter the trade without knowing when are you planning to exit, what is your stop loss. You're just entering, and if it is in minus now, if you are in red, you'll just get out. So this is a disaster, actually. Okay, so next one is overtrading. I mean, overtrading can goes both way. Someone can having 5, 6, 7 trades, and he's keep profiting. So now he's overtrading, and at the same time, it goes if you lose 1, 2, 3, even if you are not doing revenge trading. So let's say that you lost one trade at 1 p.m., then you close your laptop, you open it again at 2 p.m. It's still overtrading. You are not having revenge trading. So what does the data tells us about overtrading?
Yeah, it's again one that we can detect quite commonly is also detected. It's measured in a way, if you trade more during a day, does that correlate with like a worse performance for you, right? So do you perform worse on days where you trade 25 trades versus days where you only trade 5 times or 7 times, right? It's differentiated whether you're a scalper, day trader, swing trader or so. What might be overtrading for the one person already might not yet be overtrading for a scalper, right? So it's also quite clear to see that in the data. And yes, indeed, like roughly 30% of the traders, they tend to overtrade and are negatively impacted by it. But they feel like they're doing something. And that is exactly the dangerous part of overtrading, right? You're feeling like you are actively in the market, you're doing something, you're working, right, in a way, but actually it is a negative impact on you. And not taking a trade sometimes can be the much better decision for your trading performance, even though it kind of feels counterintuitive that not taking a trade is the better call in a lot of situations than taking a trade. But the market rewards you if you're selective, not the guy who trades the most. This is not the guy who gets rewarded, but the one who's selective and sticks to the strategy and is not emotionally impacted by it too much.
Understood. Okay, so the fourth point that we are having is cutting profits early, which is sometimes you get into a trade. It's obvious when are you want to exit, but you feel a little bit scary. What if now I start losing? What if the price drops? So can you tell us more about early exits?
Yeah. It's probably the most well-researched behavioral pattern there is in whole behavioral finance. I mean, Daniel Kahneman's prospect theory, he's the guy who also wrote the book Thinking Fast, Thinking Slow, right? He got a Nobel Prize for prospect theory together with Tversky. And that found out that losses hurt us as humans 2 to 3 times as much as an equivalent gain brings us pleasure. Right.
Okay.
Knowing this and knowing you are in a trade, let's say your target is at $2,000, you're now at $1,000 profit. Right. It hurts you 2 to 3 times as much to lose this $1,000 again, those unrealized 1,000, then it would bring you pleasure to gain an additional 1,000 on top. So
Wow.
knowing this, it's kind of rational again. Why do we cut our profits at this point? Because losing it would hurt us more than gaining an additional 1,000. So we feel like we should better get out. In the end, that leads to something where we always cut our profits small and we double down on our lost trades. And it's impossible to make money like this, right? If you always just have very small profits, like if we get to the momentum, we cut the momentum short. No, let's get out. That can never make up for those losses which we inevitably have in trades as well, right?
Yeah, correct. I mean, from the outside, it feels like you are being on the safe side. You are exiting early.
Yeah.
You are getting out of the market.
Yeah.
But actually, from the data you just said, this is like sometimes it's a bad choice to do.
Yeah. I mean, there's this saying, right? How does it go? You can never go broke by taking profits. I like this. Typically, what traders say a lot, but it's actually so bad advice because if you keep your profits so small all the time, that will long term definitely can hurt your performance a lot. Yeah.
Understood. So let's talk about the technology. TradeMedic was trained on over 500,000 accounts. Can you explain on a simple level what is the AI is actually doing over there?
Yes. In the end, it's a pattern recognition, right? So also if you look at LLMs, what are LLMs built for? What they're good for, right? Is they have words in order and they predict what's the next word. That is essentially what LLMs are doing in a nutshell, right? And also for TradeMedic, it's okay, now with this massive data set, it finds those behavioral patterns which correlate with worse or better performance, right? So if it finds a pattern, for example, overtrading, hey, I can see the more the trader trades throughout the day, the worse becomes the performance, right? In the end, the algorithms don't know that it's overtrading, right? That is then something we still have to add to the technology. But yes, it finds those patterns and then significances on does the trader get significantly better or worse in this pattern? And that it can find very reliably by now. And through the big data pool of traders, it knows a lot of those patterns right now. So when you then connect your account, it already knows those typical patterns, can screen through it and see those 5 here I can clearly see in this trader's data as well. And then it goes a level deeper and really calculates what is now the dollar value effect from overtrading or revenge trading or cutting your profits too early, whatever it is. And so this is And in a little bit more than 1 or 2 sentences, is the tech behind it.
But let's talk on the trader side. What does the trader actually receive? What does the report look like? And what is the most common, let's say, reaction when people see it for the first time?
Yeah. So the report is brutally direct in a way.
Okay.
So you open the report and you see, this is my main issues to improve. Dollar values, revenge trading, $5,832. Impatient exits, that much, right? But the same on the profitable side. So this is the very first thing you see when entering the report. So in that way, it's kind of brutal. It tells you the answer first, right?
Yeah.
And the most common reaction that's as you said, kind of I knew it, but I didn't know it's that bad.
Yeah.
So if you really want to only look at the first reaction, it's like, okay, I mean, you have a sense. Did I revenge trade? Did I double down too much or cut my profits too early, right? But people, they are very surprised when they see the numbers, the exact dollar value or whatever currency you're having on the account. And then it's like, okay, I knew that is an issue, and it becomes more like, okay, I gotta start working on this right now because it's draining so much of my profits, or look at my strengths. I really have to make more use of them because there are ways and areas where I do very well already. I have to put much more focus on this from now on.
Understood. One thing I would find out like very useful, like let's say that now you get your first report.
Yeah.
And the second report,
Yeah.
you will be able to see it like your data is improving, or is it like one time like new report every time? It's not linked. Is all the reports are linked that you will be able to see, okay, I'm improving. I'm not doing any more revenge trading. Will it shows us that you are doing good in the bad things?
Yeah. So in general, the report is live, right? With every trade you do, it updates.
Okay.
So you can really use it as like a live tracking tool. But what you say is extremely important. So there is also a part to it and a section in there which is like the performance over time. So where you can see for your main strengths, for your main improvement areas. Now, how much impact did it have during the last 4 weeks, and also in the last 3 months, 1 year, over all time, right? Or also month to month, you then can compare, did I now mitigate, for example, revenge trading successfully, or did it maybe even get worse? And the same on the profitable side, right? So do I make use of my strengths more? It's a super important feature, and this is then really where it brings the value long term and not like a one-time assessment. It has to help you getting better and having a better performance. That's what it's all about, right?
Yeah. Okay, great. So now let's talk a little bit about the FP Trading and Hoc-Trade partnership.
Yeah.
FP Trading and Hoc-Trade. Jonas, from your side, why did you choose FP Trading? There are so many brokers out there. Why is it FP Trading?
Yeah. Honestly, it was quite an easy choice because I know a lot of people from the team from FP Trading for a while. So the trust is there. I trust the team. Some of the people I know for a few years already. I know they are building something legit here. And it shows something that FP Trading said, look, we want to enable this for every trader, right? Sometimes it's only like for VVIPs or something like this. But at FP Trading, you guys said, no, we want to give this to everyone, right? Everyone that wants can access the report. And that shows that, yeah, you want to enable the traders also with new tech, empower them, right, to improve. And that was for me also a great sign of like, okay, our ideas on how you can help those traders match very well. So let's do this.
Well, thank you very much for your trust. So for someone who is listening and he's already an FP Trading, what do they actually get and how quickly can they see their reports?
So you can just, it's already live in the client portal, right? So if you log in, you see the FP Trading or the FP Trading AI. You can request it for your trading account.
Okay.
And it's essentially there within a few seconds, right? I mean, give it 5-10 seconds that all your data is being loaded into the system, but then you can access it right away. There's really no big waiting time there at all.
Nice. So let's talk about the data a little bit. So you have studied more than 500,000 traders account. That's a huge amount of accounts, to be honest. What is the most surprising thing that you found? I mean, something that even you did not expect to be there.
Yeah. The most surprising one for me is actually a really boring one.
Okay.
So if you look at profitable traders, right? So roughly 20% of the traders were profitable in that data set. 80% were loss making, right? Which matches the typical numbers which you also see. And one of the biggest indicators of a profitable trader was that he performs well during low market volatility. So like a boring trading, right?
Yeah.
So there's not much happening in the market, but this trader is profitable during this time. I think it was 37% of the profitable traders show a dedicated strength of being good during low volatility, whereas only 5% of the traders that are loss-making have this strength, right? So it's more than 5 times more likely to find this in a profitable trader than in an unprofitable trader. And that tells you a lot about like what trading really there is also about. It's like, it's the basics. To be good during low market volatility is kind of the basics of trading, and a little bit boring, yes. But it's the foundation you need as a trader, right? So this was very surprising.
So actually the data tells us that you need to trade low, or there's absolutely no news or anything. That's the right time to trade. That's where you actually make profits.
It can be that those traders still make money also during high volatility, all right? But it tells us, first of all, if you can't even make money during low volatility, then there's probably no way that you are being a very low likelihood that you're going to be an overall profitable trader overall if you can't make money during those market environments. Think of it like surfing, windsurfing, right? You learn windsurfing when there is low winds out there. There's don't practice during a storm, right? You have to practice during easier environments that give you more time to make your decisions, and not in like the most extreme scenarios, even though it looks more fun from the outside.
Okay, great. 75% of traders lose money. Everyone knows the number, but no one really understands why. Jonas, can you help us understand?
Let me give you the 2 main reasons we found in the data now for 500,000 traders. 45% of the traders analyzed fail to call it a day. What does that mean? You are in the extremes. You have a bigger loss during the day, a bigger profit during the day, and the decisions you make then, you're very much impacted by the emotions you have during the day, and those trades significantly perform worse than the other trades that you're doing. That is the most common found one. The second most common one, at roughly 40% of the traders, is revenge trading. Roughly 15 minutes after a loss, the trades you take during this time, you're impacted by trying to get that loss, that money back which you just lost. And as in turn, you make decisions that are way worse than in trades you would otherwise take.
So Jonas, this is, let's say, the good part you talked about from your data. Tell us about the red flags that there. He found out that it is shocking.
So there are, of course, patterns that kind of, if you have it, it's really bad, right? If you have it. So one of them is doubling down, DCA, dollar cost averaging into your trades, however you want to call it, right? Roughly 20% of the traders have it in their data, but only 5% of profitable traders have it. So if you only look at the profitable traders, only 5% have it, but in the overall data set, 20% have it, right? That means if you have it, you're much, much, much less likely to be a profitable trader. And for doubling down, I believe this makes sense, right? Because if you're doubling down and and lose, that is usually a large loss to your account. And they're just like the typical risk and money management comes in. If you lose 50%, you have to make 100% from there in order to just get back to where you were, right? So if you go deep into a drawdown, it's incredibly difficult to come back. And yeah, for doubling down, we see that very explicitly in the data that if you have this is kind of a red flag that makes it then really difficult to be a profitable trader overall.
So 20% of all the traders have it.
Yeah.
Out of these 20% of the traders that having it, only 5% are in a green zone or profits.
No, slightly different.
Can you?
20% of all traders have it, show doubling down. But if we only look at the profitable traders, of those, 5% have it.
No, okay.
Or was it exactly the way you are? No.
Okay, got it.
Yeah.
Okay. So about these red flags, from your data, should we take this very seriously? I mean, how serious is this issue?
Yes, this is the things you should work on first, right?
Okay.
Because so there are improvement potentials. Like there is no trader among those 500,000 traders that and have more than 1,000 trades that does not have one improvement potential at all. There is just no one in the data. In 500,000 traders, we haven't found a single one, right? And there are like 18, the last time I checked, that only have one improvement potential. And like 200 or so that have two. And of those 18 that only have one, every single one is profitable, right? So it does make sense for you to try to get rid of those issues that the report shows you, right? And even for the ones that only had two, still like 96% or so of them were profitable traders. So the first thing should be look at those big improvement areas that you have in the report and try to mitigate them, right? So this would be the first step I would recommend every trader to do when they look at the report.
Okay, got it. So if we compare traders who make money against the traders who lose money, what is the most, let's say, main behavioral difference between both of them?
I mean, this goes a little bit back also to the part we discussed about like low volatility market environments, for example. You have those differentiating factors which we see in the data, where profitable traders are just way more likely to show those patterns, for example, and loss-making traders much less likely to show those patterns. Another one is, and it goes a little bit into the same direction, is trade ranging markets, right? Yeah, I think it's 27% of the profitable traders are very good at trading ranging markets. So a market where there is no clear trend, up or down trend in the market right now. So again, kind of a boring market environment, but I don't have the exact number, but 50, 60, 70, 80% of the time, the market is just not moving strongly in a trend, right?
Yeah.
So you need to be able to cover those market environments as well as a trader. Yeah, those more boring times is when really the good and bad differ a lot, where some people get bored and start to overtrade and then lose and then start into a revenge trade, don't give up on a loss and double down. It's easy to break or to blow an account in a market environment like this. But the good traders, they know how to act in those different market environments and be able to retrieve some profits from the market there as well. That is probably the most differentiating factor.
So now, since you mention it, it's actually makes a lot of sense, because a trader who was trading in boring times, let's say, he doesn't have that fear of missing out that's there in, exciting times, let's say, right? Because, in the boring times I trade, I make profits, I close.
Yeah.
So, at the end, all the data is linked somehow, all these behavioral issues that the trader is having, somehow all of them are linked in some way, that if you are having FOMO, then obviously you're having over trading as well, because you are fearing out of missing opportunity. At the same time, you will do over trading.
Yeah.
So somehow I believe it's all linked, right?
You're right. It is interlinked, and I would say it's interlinked on two dimensions actually. The one is like the market environment, right? You know which market environment you're good at and when to. I mean, you don't have to trade when the market is crazy, right? Yeah, you are tempted to, but if you know that you should better stay out at this time and don't trade, it's probably the way better decision to make at this point, right?
Yeah.
And the second one is also based on the patterns that you have, also certain strategies match better or worse to you, right?
Mhm.
So earlier we talked about prospect theory and loss aversion. So some people, for them, it hurts them much, much more, like 3, 4, 5 times the loss that they have, then they get equivalent pleasure from gain. So if you lose $1,000, you have pain maybe 5 times as much than if you gain $1,000, you have pleasure. Right? Some people are just more wired like this. And if you think about it for like a trend following strategy where you will always sit on your profits, unrealized profits, and you have to let the trade develop. But if you have this behavioral aspect very strong, it's impossible for you to do, right? You will always be there and want to secure your profits and get out of the trade early. A trend following strategy for someone like this will not work. Probably a scalping strategy is much better fit for this trader than a longer holding trend following strategy would be, right? So it's the market environment, and I think also the personality strategy match that has to be there, right?
Noted. So earlier on, you mentioned about, the safe zone regarding the revenge trading, let's say. You mentioned that it's for you, it's 30 minutes, but it's different from one trader to other. Can you tell us more about the data? Can you tell us, like, okay, for you, it's 30 minutes, but what does the data say? What's the average for, for this over half many accounts that you see? What's the average window of safe zone? Is it always like 30 minutes like you, or just because you are an expert in this trading area, so it's 30 minutes for you?
I don't think that actually has also to do with the expert, because my recovery window is actually a little bit longer than for other traders. The average we see is rather 15 minutes.
Okay.
And for me, it was rather 30. So apparently I got annoyed by my losses a little bit longer than the average person does. And I have to give myself a little bit more time and space than thereafter. But yeah, so the average is rather in the 15 minutes to 20 minutes window for the traders that show it. I mean, there's still also more than half of the traders out there that are not negatively impacted by it, right? But yeah, for the ones that are, which is a high percentage, on average, it's in the 15 to 20 minutes. But I mean, look at the report; it will tell you the exact number, what it is for you. That is the easiest. So.
So let's go to what traders can do today.
Yeah.
So for someone listening right now who is thinking, okay, this is me, I am having FOMO, I'm having revenge trading. What are the first simple steps they can do to start improving themselves? Let's say before using your tool, before using the tool, or after using the tool. Because you have explained that, okay, the tool is showing a report where you can improve yourself. So for someone who is listening, what is your advice right now? Like, what's your advice right now for him? And of course, after he used this reports, what is let's say, the bigger picture that he needs to understand for him to make himself more profitable?
Yeah. So let's say it's someone who does not have access to the tool, right? Or before accessing the tool. The number one thing I would do is simply write down for every trade just one word. Because a trading journal gets too complex and takes too much time to maintain after a while. This is what we see for a lot of people. But there's a lot of value just in one word for every trade. Write down your emotion that you were having at that time. That trains you on like looking at yourself first before making a decision, right? Yes, you can look later on at that data and try to find some correlations of like, whenever I've been angry or FOMO, then it gets better or get worse. But this is not the main point of it. The main point is of like getting this awareness, first of all, for yourself. This is always the most important part, getting the awareness of like how emotions and behavioral patterns impact the performance. And that everyone can do. That literally takes 2 seconds in a trade, right? And then afterwards, and this is what we see through and through in the data, and we talked about it, get the basics there. Get good during low profitability markets, first of all. Get good at trading ranging markets. Don't try the crazy volatility times and so on. Yeah, may look more fun, right? But every trader that does well in the long term gets the basics right. And if a trader tries to jump into news trading in week 2 or 3 of trading and has never shown to be profitable during a more boring market environment, very, very, very likely the trader is not going to make it long-term profitably. So that would be my second point of like, besides noting down that one word, second point is like, look at those, get the basics in place before you try the more advanced parts of trading.
Understood. So for FP trading clients, what is the easiest way to start using TradeMedic and get their first report? I mean, obviously it is in their client portal, but can you tell us more?
You need to have at least 50 trades as well, right? So before that, there's just too little data to analyze. You can imagine if there's only 5 trades, yes, then not many patterns can be recognized yet. So 50 trades need to be in place, and then the AI can run over the data and find those patterns for you. So for brand new account, it doesn't work yet, but after a few days or weeks of trading, you will be able to get the report, and then just give it a look initially. It is also a process. Not the first time you're going to look at the report, you will know everything and can directly change. That is actually a second important point on there, which I would want to add is, don't try to change 5 things at the same time simultaneously, right? Because they are interlinked as well. If you're, let's say you are revenge trading and I also have over trading and doubling down and impatient on your exits. If you try to change everything at once, you can't really see the effect directly in the data, right? So you want to make sure, okay, I'm changing a little bit something here, verify, does it have a positive impact on my performance, and then move on to the next one, and don't try to intermix all of them at the same time. So a little bit patience there, also on working on the improvement potentials and the strengths.
Where do you see this kind of technology going for the traders in general? You know, the behavioral analysis is still quite new. I mean, so let's see in the future, the near future and then in the far future.
Yeah.
Where do you see this technology?
Honestly, I would want to see it commoditized. So that is just a basic tool everyone should have as a trader. Because it is so important, right? Like, why do 80% of the traders lose? If you flip a coin, kind of, you have a 50-50 chance. Then you have technical analysis, experience, news, everything on top that should give you a bit of an edge. So you should get higher than 50% winning likelihood, a little bit more than a coin flip, right? But at the same time, we see 80% not making it, right? So there is clearly this disconnect there, which can only be explained by either everyone is wrong, trend line's wrong, which I don't think is the case, but there is the emotional and the psychology part of it, and I think it's very much needed and should be commoditized for a trader to have access to something like this and really increase the likelihood of being profitable.
What does FP trading trader will receive, and how will Trade Medic report looks like?
So the trader, when they enter the report, they directly see all their strengths and all their improvement potentials side by side, and each with a dollar value attached. That is very important. So it's not like, hey, you might be over trading, but it shows, okay, you have been over trading. That cost you $12,000 over the last 12 months, right? So it's very specific down to your actual trades that you did. And we get the response a lot that, okay, I knew I was over trading, but it's the first time now that I know the actual dollar value. So it becomes from something I should do and change to something, okay, I really have to do now and start doing it.
Tell us more about FOMO trading.
It's a very recognizable pattern we see in the data. And it's 28% of the traders we see in the data set have this behavior. And you see it over and over again. The trader, there is a big move. They haven't been in it. They feel like, okay, I have missed this move. They jump on top of it then, actually being quite late. But then at the first sign of a reversal, they jump out of the trade. They did not have their exit plan ready when they were jumping into this trade, which they entered based on FOMO. And so it's very interesting also to see that day traders have it by far the strongest. 32% of day traders show this behavior, swing traders much less, scalpers much less. So especially if you're a day trader, be mindful of your FOMO trades.
We're having spark quick questions, quick answers. Okay, are you ready?
Sure.
Okay.
Yes.
So one rule every trader should add to their plan tomorrow.
Take a break after a loss, 15 minutes, don't do anything.
What's the pattern you never want to see in a trader's report?
Doubling down. If you do it, red flag.
If you could tell every trader just one number from your database to change how they think, what it will be?
37% of the profitable traders are boring traders.
One finding from the data that even surprised you?
That revenge trading is actually not that bad. Like, profitable traders are even more likely to revenge trade than unprofitable traders.
Trading general, overrated, underrated?
It is needed, but it has its shortcomings because people do it, they stop for a week, then you feel like your data is incomplete anyways, and you never get back to it. So get a tool that actually does this automatically for you.
What's more important, well-timed entries or well-timed exits?
The data shows entries.
Strategy or physiology? If you could only prove one, which one makes the biggest difference?
It is psychology.
Last question. Anything last you want to share with the traders listening?
Yeah, think of it like trading psychology. It's the most human thing, right? We all have that. I mean, we talk about it a lot today, and it may feel like something judgmental or whatever it is. It's really not. Everyone has it. It's completely normal that we have those behavioral patterns. They served us very well in the past of like helping us in dangerous situations and so on. So, but we need to be aware of it and we need to work on it, right? And it is worthwhile to work on it. I told you the stat earlier, there are 18 traders out there that only have one improvement opportunity detected in the data, and every single one of them is profitable, right? Or if you only have two, still 96% of them are profitable. So it is a very important part, and yeah, just get started on it today. Don't be ashamed of like looking at your emotions and patterns. But it is a very critical point you need to tackle, even though it sometimes hurts a little bit to look into the mirror and see what's actually been going on.
Jonas, this was very valuable information. Thank you very much for your time. I believe the idea of all these patterns, FOMO, overtrading, can be measured and be changed and be seen by a report will change the game for a lot of traders. If you are an FP trading client, you can see your report, get your report through our client portal right now. You can just click on FP Trading AI, get your report. If you are not, maybe this is a good time to see what we are offering. This is Hasan from FP Trading Podcast. Stay disciplined, trade smart. See you in the next podcast.